All right, so let's jump into today's financial news. We've got a lot to cover, from partnerships in tech, AI changing how things work, the world of gaming, and big decisions being made in the business world.
Yeah, feels like things are changing so fast these days. It's fascinating to see how everything connects, even stories that seem totally different.
Absolutely. Speaking of connections, our first story is about Finastra and IBM. They're joining forces, to improve cloud-based lending services. This is mainly for Finastra's corporate clients, those in North America and Europe. The design and implementation, all that's going to be handled by IBM Consulting.
Okay, but what really stands out to me here is that they're bringing in IBM's Watsonx generative AI. That's a big deal. It's not just about making things simpler, it's about making lending smarter, more efficient. And the fact that IBM's going to stick around and provide ongoing services, that tells you they're serious about getting these services up and running fast and making sure Finastra's customers see the benefits quickly.
Right. And it's all running on Microsoft Azure, so you've got Finastra's financial expertise combined with IBM's cloud power. It's interesting how the big players in finance are really embracing these advanced technologies to keep their edge. What are some of the benefits they're highlighting?
Well, they're talking about faster deployment, which makes sense with the cloud. Simpler processes, too, because a lot of it will be automated. And, of course, better cost efficiency. I think this really shows how the world of finance and cutting-edge technology are merging. Could change lending as we know it.
Definitely a trend to watch.
Oh.
Now, let's switch gears to the gaming world. GPTBots.ai, they've partnered with a big international gaming company to, well, revolutionize their customer service with AI. They're actually integrating it right into their live chat system.
Smart move. Think about it. The gaming industry is massive, global, and players need support around the clock. Managing all those requests could be a real nightmare. This partnership seems like it's directly tackling that problem head on.
And the results they're reporting are pretty impressive, honestly. They say they've cut the workload for their human agents by a whopping 65%. Response times are way faster, and they've even got better multilingual support. And they're calling it an easy tech upgrade that actually saves money.
Music to any company's ears.
Mm.
I think it shows how powerful AI can be, especially when it comes to customer experience and making things run smoothly behind the scenes. And it seems they managed to integrate it without a ton of hassle, which is key for any company looking to adopt AI.
Agreed. Now, let's talk about something a bit more tangible, gaming hardware. Qualcomm, they've just dropped 3 new Snapdragon G series platforms, all designed for those handheld gaming devices. And they're not just focusing on one type of gaming. We're talking cloud gaming, console-style, Android, and even PC gaming.
Yeah, Qualcomm's stepping right into a ring where AMD's currently king, and they're coming out swinging with some serious performance upgrades. You take the Snapdragon G3 Gen 3, for example, that's for Android handhelds. 30% faster CPU performance, 28% more graphics power, and they've thrown in Wi-Fi 7 support too.
And then you've got the G2 Gen 2, specifically for cloud gaming. They're claiming it's over twice as fast for the CPU and almost 4 times faster for the GPU, also with Wi-Fi 7 and supporting really high refresh rates. And for those on a budget, they haven't forgotten about you. There's the G1 Gen 2 for Android cloud gaming. It's going to support 1080p resolution at 120 frames per second.
A lot to unpack there, for sure. It's a gutsy move by Qualcomm, taking on AMD like that. Their strength has always been mobile tech, so it'll be interesting to see how this plays out. The Wi-Fi 7 is a smart addition, especially for cloud gaming, but it's not always easy going up against x86 processors.
We'll see. It seems like they're already working with some handheld device makers, though, and we can probably expect to see devices with these new chips early in 2025. Could be a real game changer, literally.
Yeah, the next couple of years will be interesting to watch. Now, for something a little different, remember that time the founders of that dating app, Coffee Meets Bagel, turned down Mark Cuban's huge $30 million offer on Shark Tank?
Oh, yeah. Back in 2015, they initially pitched for a way smaller investment. I can't imagine saying no to that kind of money, especially on live TV.
I know, right? It was a defining moment for them, and the biggest offer in the show's history back then. You can imagine the backlash they got after the episode aired.
But they stuck to their guns, even when investors were pressuring them to copy Tinder's swiping model. They were all about safety, quality, and, trying to create more meaningful connections.
And it seems like it paid off. By 2018, they'd raised almost $20 million in funding. Talk about founder conviction. Sometimes the long-term vision outweighs a quick buck.
It definitely proves there are different paths to success. All right, switching gears again. Let's talk Nvidia. Their stock's taken a bit of a hit lately, even after all the announcements at their GTC AI conference. Seems a bit counterintuitive, doesn't it?
Well, yeah, on the surface, they've got all this positive buzz about their AI developments, but the stock keeps slipping. Their market cap has taken a big hit since the start of the year, and their price-to-earnings ratio, that's been dropping too.
Hundreds of billions of dollars in market value gone. Analysts are pointing to a few things like interest rate sensitivity, trade tensions, and just the sheer volume of tech stocks in the major market indexes. And then there's this whole thing with competition from China in the AI chip space.
Plus, you've got the rise of open-source large language models, which could really shake things up for those big AI companies.
Yeah.
It's a reminder that even the giants aren't immune to economic trends or competition. Those open source models, by the way, they're basically AI systems with publicly available code, so it makes it easier for others to get into AI development, less reliance on the big players.
Right. And while analysts seem to think Nvidia will be okay in the long run, the market's a fickle beast in the short term. Speaking of potential challenges, Bill Gates has been making headlines lately. He's been pushing the Trump administration hard to keep funding international health initiatives. Seems like he's genuinely worried.
He's made it pretty clear that he's concerned about these potential funding cuts from USAID. He's saying that, even with all the resources the Gates Foundation has, they can't fill the gap if the government pulls back.
It's a big deal. President Trump's administration has been making moves to cut USAID's budget, and that's got a lot of people worried about all those health programs that rely on that money. And even though some of these actions have been challenged in court, there's still a lot of uncertainty.
Makes you wonder how sustainable some of these programs are without that government support.
Right. Gates has said that his foundation is more like the venture capital arm of philanthropy. They're about kickstarting innovation, but they can't provide the kind of long-term funding that an agency like USAID can. Shows just how important that government funding is, especially for global health crises.
No doubt. Philanthropy can do amazing things, but for those large-scale efforts, you need the backing and the infrastructure of government.
Let's shift gears again to the tech sector. There's been some interesting talk about mergers and acquisitions. Dan Ives, an analyst over at Wedbush Securities, he's saying that big tech might be gearing up for another wave of M&A activity after a period of, well, let's call it intense regulatory scrutiny.
That's interesting. And it's not entirely surprising considering Lina Khan is no longer the FTC chair. I mean, Google just agreed to acquire that cybersecurity company, Wiz, for a mind-boggling amount of money. That seems like a pretty clear signal, right?
Yeah, $32 billion. It's a massive deal, and it shows how serious Google is about cybersecurity. And another interesting thing, the FTC has been taking down a lot of blog posts from Khan's time there, including some that were pretty critical of big tech.
That is interesting. It suggests a change in the regulatory landscape. Though I doubt the FTC's completely abandoned its focus on data privacy and fair competition. There might be more M&A, but I'm sure the scrutiny won't disappear entirely.
Probably not. Now for a quick update on the final frontier. NASA astronauts Sunita Williams and Butch Wilmore, they're back on Earth. They just splashed down in a SpaceX Dragon capsule after spending a whopping 286 days on the International Space Station.
Wow, that's a long mission. Didn't they run into some problems with the Boeing Starliner? I think they were supposed to come back on that.
Yeah, they had to extend their stay because of issues with the Starliner. In the end, they ended up returning on SpaceX, apparently at President Trump's request.
Makes you realize that even with all our advancements, space travel is still a risky business. You need dependable systems to get people up there and back safely.
For sure. Oh, they're back now, and they'll be undergoing some health checks before they can finally reunite with their families. They did some good work up there, though, contributed to about 150 science experiments. And for Sunita Williams, this mission put her in second place for total days spent in space by a U.S. astronaut. 608 days? That's incredible.
That's amazing. But those issues with the Starliner are a bit concerning. Boeing might have to go back to the drawing board, maybe more uncrewed tests before they try again with astronauts.
Let's hope they get it sorted out. Now, turning back to Earth, and specifically the ongoing opioid crisis. Purdue Pharma, they've just proposed a new bankruptcy plan offering at least $7.4 billion to settle all those lawsuits they're facing.
So they're trying again. Remember, the Supreme Court just shot down their previous settlement attempt. This new plan, though, outlines exactly how the money would be distributed. We're talking states, local governments, and individuals who've been directly impacted by the opioid epidemic.
Yeah, And under this plan, Purdue is planning to reinvent itself as a public benefit company. They'd focus on things like developing treatments for opioid use disorder and overdose reversal medications. They'd also be contributing a big chunk of money and implementing other non-monetary measures as part of the settlement.
Interesting. So they're aiming to make amends, not just financially?
Exactly. And this time around, creditors have a choice. They can either accept this settlement or keep going after the Sackler family, the owners of Purdue Pharma, legally. A big chunk of that settlement money, something like $850 million, is specifically set aside for individuals who've been harmed by the opioid crisis.
That's good to hear. It's a long road to recovery, but this could be a significant step toward providing some relief and dealing with the fallout from this public health emergency.
Absolutely. Hopefully it's a step in the right direction. Now, let's talk about something a bit more positive, renewable energy. Copenhagen Infrastructure Partners, they've just achieved financial close on their Fengmiao offshore wind farm project in Taiwan.
Okay, so this is CIP's third offshore wind project in Taiwan, and it's the first one to reach this financial stage under Taiwan's Round 3 offshore wind development program. They've secured a lot of funding for this, too, from a mix of international and Taiwanese banks, even with some backing from export credit agencies.
Vestas is going to provide the wind turbines, and they expect construction to be finished by the end of 2027. And here's the interesting part. They've already got long-term power purchase agreements with several big corporations for all the electricity this wind farm is going to generate.
So corporations are stepping up to support renewable energy. That's a good sign.
It is. This project's a big step for Taiwan's offshore wind sector. It shows that these large-scale renewable projects are becoming more mature, more attractive to investors. And the fact that they've got both local and international financial institutions involved just highlights how global this energy transition is.
It's a team effort, that's for sure. All right, moving on to a different kind of innovation. Alfa Laval, they've just snagged their first contract for their ammonia fuel supply system, the FCM Ammonia.
This is designed for ships that run on ammonia, a cleaner fuel source. This first contract is to install it on 7 dual-fuel LP ammonia carriers built for Tianjin Southwest Maritime. Ammonia seems to be gaining traction as a way to make shipping more sustainable.
Yeah, the maritime industry knows it needs to clean up its act. Finding alternative fuels like ammonia is essential to make that happen.
Alfa Laval is excited about this contract. They say it shows they're ready to deal with ammonia as a marine fuel, and they're building on their experience with other alternatives like methanol and liquefied petroleum gas. They're planning to deliver the first FCM ammonia unit to Tianjin Southwest Maritime at the end of 2025.
Sounds like a significant step towards a greener shipping industry.
Absolutely. Unfortunately, not all the news is positive. The Nasdaq composite took a tumble today, dropping about 300 points. Palantir and Nvidia, those shares took a hit.
Yeah, the CNN Money Fear and Greed Index is still stuck in extreme fear territory. Investors aren't exactly feeling optimistic.
U.S. stocks overall closed lower, with the tech and communication services sectors taking the biggest hit. We did get some economic data recently, showed that import and export prices are up, and industrial production increased in February, both more than expected.
So some mixed signals there.
Right now, investors are waiting to see what happens with the earnings reports from some big retailers. Signet Jewelers, Williams-Sonoma, Five Below, they're all coming up soon. That should give us a better idea of how things are looking for the consumer economy.
The market seemed pretty jittery right now. It's understandable with all the economic uncertainty and those sector-specific concerns we talked about.
Well, let's see what Ollie's Bargain Outlet has to say. They're releasing their fourth quarter results before the market opens today.
I'm curious about this one. Analysts are saying their earnings per share might be a little lower than last year, but they're expecting higher revenue. Plus, they've got a new president and CEO.
Yeah, it's always interesting to see how new leadership shakes things up. Some analysts have already changed their price targets for Ollie's stock, so it's clear there are different opinions about how they're going to do.
Leadership changes can definitely impact investor sentiment and the direction a company takes. We'll have to see what their plan is.
Another company to keep an eye on is Signet Jewelers. They're also releasing their fourth quarter results before the market opens.
The predictions for Signet aren't so rosy. Analysts think both earnings per share and revenue will be lower than last year. Remember, they already lowered their sales forecast for the quarter.
Not a good sign. And just like with Ollie's, several analysts have adjusted their price targets for Signet stock. It's interesting, though, because how well the jewelry sector does often gives us clues about overall consumer spending.
True, jewelry is a discretionary purchase. If people are cutting back on those, it could be a sign that the economy isn't doing so well. We'll need to see what the numbers say.
Let's end on a more positive note. Stack Infrastructure, they just secured a cool $4 billion in green financing. That's going to help them develop their data center campuses in Virginia, Oregon, and Toronto.
That's a huge investment. Shows you how much data centers matter, especially in places like Northern Virginia. It's become a real hub for digital operations with all the demand for AI, machine learning, and cloud services.
And get this, just their Stafford, Virginia campus is expected to generate a lot of tax revenue every year, and it'll create tons of jobs. Since 2019, Stack has secured a total of $9 billion for projects in Virginia and a whopping $20 billion globally.
It's pretty mind-blowing when you think about how much money is pouring into this sector. The digital transformation is happening everywhere.
Yeah, it's no longer the future, it's the present. Well, that brings us to the end of today's whirlwind tour of financial news. We covered everything from tech and business strategies to market swings and developments in global health and renewable energy. It's a fast-paced world, and we try to bring you the key things to watch.
Keeps us all on our toes. Thanks for joining us, everyone. Until next time.
See you all next time.